Good evening, ladies and gentlemen. Welcome to FreeFX, your source of free education in foreign exchange markets. This evening, it is Sunday, the 28th of June. We're now actually into Monday, the 29th of June, just after midnight, at 1:45. We're going to talk about a particular pair, which is the Kiwi Yen. That's the New Zealand dollar and Japanese yen pair. Now, this has been of interest to me since 2013, and indeed I made a video on this particular topic, which I am showing you here. And this video was regarding the particular levels that I was analyzing at the time. And this is really something that I was interested in from a very technical point of view, although I was looking into fundamentals already at some point here. And you can see that from what I was drawing, there were particular points that I was trying to make about several levels. But obviously at this point we're at the 85 level, and possibly we were expecting either to reverse around this point or continue upwards. And that really was something that I was trying to establish at the time. And indeed, with a different setup here, I was also demonstrating that we're in a 1000 pip range, just like back in the days of 2001, 2002. Then, obviously, what happened through the time between that end of 2013 and throughout all of 2014 was that we came into really a situation that I was in a way forecasting, but not actually sure. As you can see at this point in the video that I made in 2013, I was trying to conceive a possible cyclic or cyclical phenomenon where the pair would climb up from the 50s, about 50 something, all the way up to almost 100, so about 5,000 pips, and then it would then return almost to the beginning and then climb back up and sort of in a cycle, so up, down and up, quite a straight, almost a sine wave. Now, in the article that I subsequently wrote for Daily FX in April of 2014, so only a few months after the video, I was going even further back into charts ranging from the 1980s. And I was making the point that the level of 90, as you can see here in this very historic chart, wasn't really breached for a number of years until the great financial crisis, where this price kind of first escalated and then collapsed. And it escalated to short of 100 and then collapsed and then started pushing higher again. But really, these levels of 90 and 100 are historically very difficult to break, obviously, because they are historic highs and they're not really something that we've been pressing on constantly. So my article here was talking about the magnitude of these moves from the tops down to the troughs, and how every time this happened in 1990 to 1993, that one, then 97 to 2000, and then 2007 to 2009. Every single time these actually constituted 1, 2 and 3 bigger moves, so nearly 4,000 pips, nearly 4,500 and over 5,300. This means that the next one could be either bigger or then if we average these, you would sort of get an idea of what you might expect. So the average I put in the article here was 6,000 pips. Okay, and that was you know, quite a tremendous conclusion that I was coming to, and it is indeed very difficult to forecast something of this magnitude. However, let's go into some charts, because it does interest me to see how we could look at this in a different way. And first of all, I like to look at where we are at the moment, because we just had a gap down following news over the weekend that the deal wasn't reached on Saturday between the Euro group and Greece. So we are now at a stall, and the Greek citizens have been withdrawing cash from their accounts, but the banks are running out of cash, so they're closing the cash machines, and they're accused of the cash points. But the cash machines, the banks will close on Mondays, and a few there are reports that many have already closed their outlets, so people won't be able to withdraw their money, and they could be facing a very tough situation of being unable to pay their bills. So a lot of people are taking physical money out of the machines to cover themselves in case of any liquidity shortage from the banks. But Monday will be a bank holiday, meaning not a holiday as such, more like a just closure of the banks. And now, so this news obviously had an impact on the opening tonight, or rather last night, of the trading. And we can see from the various prices that I have here, starting from the euro dollar. Okay, so it dropped about 200 pips. And if you want to measure it exactly, I can tell you, because it's worth just measuring these things. So this one candle was about 150 odd. But even more significantly, we had other things that attracted my attention. And I can tell you one of the most impressive ones was the Japanese Nikkei 225. The Nikkei 225, the Japanese equities index, dropped 500 pips, okay? 500 pips in one go. So it gapped down essentially by 500 pips, and it looks like it's still dropping. So if you measured from here, it's a 500 and then another 100, so 600 pips so far. And I'll show you the S&P 500 as well, which is also a very important benchmark for risk assessment. Okay, this one dropped again about 400 pips, so closer than Nikkei 225. It's bounced back since, but so at the opening of trading last night, or the tonight, we have massive moves from the equities to the downside. US equities and Japanese equities. The euro dollar has dropped a considerable distance, and it's now dropping as we speak below the 1.10. So the 1.10 has been breached. Now, how strongly this may remain to be seen, but certainly it's a considerable move. And I'd like to add the volume just so that we have a sense of where this is going in terms of the strength of the move. I'll show you on the 5-minute what we're looking at. Now, this candle down is, depending on what kind of charting you might have, it doesn't show a volume there because it's just a gap down. But there is a big volume here, okay, on this candle, which is actually very small. But it looks like the downtrend is established, so it may be worth trying tomorrow to establish a volume using a hourly chart and see how it all fits together. The other pair that I was going to show you, not the pounds Kiwi, that is one of my favorites, but we'll leave that one to rest for a moment. And the other one I was going to show you was the Kiwi yen. But the Kiwi yen in this particular instance is going to be monthly. Now, we're going back to the monthly because that's what the my article was referring to. and what my former video in 2013 was referring to. And that one, obviously, the article was in April 2014, so just about here. And so at this point in April 2014, we were reaching the level of 90, okay? And I was forecasting, really, or not forecasting, but sort of making the point that 90 was a level that historically had only been breached once, and that was the time it reached 100. Now, since then, when I was showing the video, we're in December 2013, and that point we're around the 87 mark, more or less. Okay, and that we're about here, and there was a possibility of turning back, but actually we pushed higher, and then I wrote the article and we're at 90, and since we pushed higher and we got to about 94, there we go, 94, not even 95. Okay, now that was the 94 level, was in December 2014. Okay, now let's kind of get a view of the whole chart history here that I'm allowed from 2001, and you can see that what we can gather is that my original idea was that we'd have a sine wave repeating itself almost, and if we measure this, we can have an idea of the scale of this move from about 50 to about this peak at 100, more or less. We have, 4,704, let's say 4,500, 4,662. From this to here, we have 4,900. So they're similar moves, not necessarily identical, but similar. So we've achieved these moves for 700 and for 800. So very similar moves in terms of scale. So what we're going to see now is essentially this situation that we have. Let's say that we made these kind of similar. Okay. So we have topped, and we have achieved these two. Okay. And clearly you can see that we have potentially another big move to the downside. Now, how did it start the previous occasion? Well, the previous occasion is, you can see, two red candles of a certain magnitude. Right. Well, this is the monthly chart, obviously, so that we are going to start into the month of July very shortly. So it'll be interesting to see after these two initial red candles, okay, this is the June candle, whether we'll continue to the downside. Okay. Now, in terms of levels, we have various ways of assessing this, and we could try and sort of gauge any particular levels, but it is interesting to see, going back to the if we went to the daily chart, okay, we have been at some point, this is the gap from this weekend, so from Sunday night, i.e. just a couple of hours ago, and we've gapped below something here. It's worth noting that we were, or certainly I was, waiting for a break of this sort of level, okay, sort of 85 or 84, let's call it 84 something, 84.50, something like that, between 84 and 85 anyway, let's say 84. And we have now actually achieved this break. So here was the first attempt, second attempt, and a third attempt has come in the form of a gap, weekend gap. So all in all, we could say that we have actually started the descent. So we have to wait for confirmation and see how it goes. Now please remember that this is just an educational video, so take everything with a pinch of salt. Good luck trading out there, and best of luck.